In capital markets, experience is shaped by cycles, discipline, and conviction. With over 2 decades in the Indian capital markets, Mr. Tejas Gutka is a seasoned investment professional with a sharp and strategic approach. He currently spearheads Electrum Capital's Alternative Investment Funds initiative, driving focused capital allocation in evolving markets. His expertise spans both equity and fixed income asset classes, balancing growth with risk discipline. Previously as a fund manager at Tata Mutual Fund, he managed over 8,500 crore rupees in equity assets under management. He has also held key roles at Barclays Wealth and Care Ratings, adding depth to his institutional perspective. Ladies and gentlemen, let's hear it for Mr. Tejas Gutka. In banking, clarity comes from knowing what truly matters and putting first things first. Mr. Ritesh Gupta brings that focus to his role as Regional Head Wholesale Banking at IDFC First Bank. A seasoned banking professional, he leads high-performing teams and drives strategic initiatives across the bank's wholesale business. He oversees large corporate and mid-market portfolios across West and East India, balancing growth, governance, and disciplined execution. Known for implementing strategy with precision, he plays a key role in strengthening relationships across industries and building long-term institutional value. A member of the Institute of Chartered Accountants of India and a commerce graduate from Sri Ram College of Commerce, University of Delhi, he combines financial expertise with strong business acumen. Ladies and gentlemen, let's welcome Mr. Ritesh Gupta.
I request Mr. Ashutosh Agarwal to escort Mr. Tejas Gutka and Mr. Ritesh Gupta to the stage. I further request Mr. Vishal Pammani, Director Shyam Group, for floral welcome of Mr. Gutka and Mr. Gupta. Mr. Vishal Pammani. I request Mr. Ashutosh Agarwal to please take the proceedings further and start with the panel discussion. Thank you.
Hello, sir. Hello, sir. So, first of all, I would like to introduce myself. My name is Ashutosh Agrawal. I'm the co-founder of iBricks. So, it is a small initiative to change the traditional way how we invest in real estate. So, we've made with the help of blockchain and the technology and the businesses you guys have evolved for us to make it possible for everyone to invest in real estate with just 900 rupees. So we are trying to change the world, how world see the real estate. अभी तक सिर्फ वो काला मार्केट कहलाता था, but अब उसको पूरा वाइट करके and making a humorous change कि अभी जो एक privilege के लिए था, अब वो सबके लिए possible हो. So thank you for being there.
Sounds great.
एंड सर आपका इंट्रोडक्शन तो हमने देखा दोनों का, तो बहुत एक अप्रिसिएशन बोलना चाहिए कि किस तरह से मार्केट फ्लो कर रहा है. तो सर तेजस सर, मेरा एक छोटा सा क्वेश्चन आपसे था. यूजुअली वी से मनी इज फ्लोइंग फ्रॉम गुड लक टू म्यूचुअल फंड्स एंड टू द शेयर मार्केट. So the speedily that money is flowing from the household people and in the mutual fund, would you think that India is progressing that much? The companies in India and the mutual fund which we are investing, are they also growing in that speed? So what's your thought about that?
Yeah, I think that's a good question, a good starting point. When we look at an economy, we always talk about per capita GDP, and we say, how once the per capita GDP crosses a certain number between $2,000 and $4,000, consumption in that economy picks up in a meaningful way. It's the same for financialization of savings. Once we cross that hump of $2,000, a lot of money moves away from traditional asset classes or savings into the capital markets. And I think that is what we are witnessing today in India, that we are seeing a huge share of shift happening from traditional savings to capital markets. And this is still the beginning, right? The number in the overall context of things is still very, very small. So I think journey to abhi shuru hui hai. The good thing is, India in the last 10-15 years has changed materially. Companies have changed drastically. Balance sheets have become stronger. Our profitability, our ROE metrics have become better over a period of time, which means that there is enough space for us to absorb this kind of capital flows into the country.
Great, sir. Great to hear that. Because as a new person, I am also very young right now. So as that, I always had a question कि सच में मैं investment कर दूँ, कब गिरेगा, कब क्या होगा. But that was an eye-opening कि yes, अभी तो start ही हुआ है, अभी तो future बहुत सारा बचा हुआ है. Ritesh sir, I have a small question from you. 5 years back, there was a very limited usage of UPI. There was very too much time consuming on doing that RTGS and check transfer and everything. And now when we go on this particular age and in 2016, so even credit cards are also getting the UPI versions. So what do you think about this transition and how it will change the world we see and how the banking sector will change?
Great. I think that's a evolution in banking, and you picked upon something that's recent. If you see, banking is one of the oldest professions, but has constantly evolved. आज से 25 साल पहले there were no ATMs. Everything was on physical ledger. वहाँ से we moved to computerization, we moved to ATMs, we moved to mobile apps. So the latest evolution that you see in the financial world, and all coming by way of the development in technology, UPI is one of the really successful tools. I still call UPI a tool. It's not replacing banking, it is making it more efficient. And like he mentioned, my panelist mentioned that just the beginning as far as the capital markets are concerned. So is the case with the evolution of technology in banking. UPI is one such means, but you'll see far more growth. Around UPI, there have been so many successful product innovations, product development. So there is no end. I mean, we all keep talking about and know about AI. It's something that none of us know where this will take us. So of course, banking evolved, but again, what is banking? It's just a very simple, boring business. Taking money and deploying it in more productive sectors and giving the return back to the depositor. That will always be the fundamental of banking, will always continue.
Sir, one technical question from both of you. Because I have recently learned about the technology of blockchain. So what you guys think, how this blockchain will change both the things about the capital market and about the banking? Will it help us to move forward very speedily, or maybe there is some drawback of that particular technology?
No, I think the way technology has evolved over the years, every technology has only enabled us to do better and newer things, right? when the internet came, nobody would have thought of e-commerce, right? But today e-commerce is such a large industry, right? Or quick commerce for that matter, right? So I think blockchain will also find a lot of new applications. Today, the bigger application of blockchain is largely sitting with the regulator where they are using this to scan trades. But I am sure as things evolve, we will adopt blockchain into more day-to-day usages as well.
No, I see blockchain as a very, very practical and a very useful tech that could bring a lot of transparency in banking. Uh, the tech has been around for a while now. It's a matter of adoption. Now, blockchain, of course, is not a simple tool, unlike a lot of other tech adoptions in the industry. It requires a fairly wide adoption across the entire ecosystem for it to sustain. For example, a bank guarantee issuance. Today, it's a physical document, even a digital issuance. There's still problems there could be problems on the way. With blockchain, it's real time everywhere, right? The beneficiary, the applicant, the bank. So just one simple example. So definitely blockchain is a fantastic tech tool, but again, like I said, it's about adoption. How easy it would be to adopt it in the entire ecosystem.
Thank you so much. And so I would like to tell you that IDFC has supported us in our vision. And when I met the person of contact from IDFC, and I told him about the blockchain and about our technology, so IDFC was the first bank which was so excited to help us that within 15 days, all the processes were completed and we were onboarded.
Good to hear
So,
that. Good to
thank
hear
you so
that.
much.
And, without taking too much time, but when you know Mr. Vaidyanathan, who is our managing director, we have really invested time and money in making our bank tech enabled and foremost to the technology frontier.
Great. Thank you so much to hear that. Tejas sir, we have a presentation. You have a presentation to tell us more about how the capital market works and how the money in motion works exactly. So we would like you to please take that forward. Thank you.
Good afternoon, ladies and gentlemen. It's a real pleasure to be here. And I'm going to talk about money, but not money at an individual level or money at a business level, but money at an economy level. We've set up a very ambitious dream to become a developed nation, a Viksit Bharat, by 2047 when we celebrate 100 years of independence, right? And the question that I'm trying to answer through this presentation is, does India really have what it takes to become a developed nation in the coming 20 years, right? And I'll take you through this story. Now, when you look at developed nations, every nation, when it developed, there was a moment that defined that transition from an emerging nation to a developed nation. And for each of these nations, I've listed the dates or the year when this transition happened, right? What about India? You know, while we've set the vision, where is the moment? Apna time kab aayega? Now, to put that in context, let's see where India is today, right? India is today the fourth largest economy. We are soon going to be the third largest economy. We are already the fastest growing economy, which means that we are right up there amongst the developed nations in terms of size. But in terms of global trade, we are hardly there, right? Our participation in global trade is about 4-5%, not more, right? So if India really has to become a developed nation, we really need to participate in the global trade. And therefore, is this dream of a Viksit Bharat just another fancy slogan, or do we have what it takes? My sense is that this moment for India has already arrived, and it arrived in the year 2020. We didn't notice it as much because it looked more like a tax incentive, but I think that was a breakthrough moment for India. And before we get to what that moment was for India, I want you to hold one figure in your hand, right? And that figure is $30 billion. Simple figure of $30 billion, yeah? Now what is $30 billion, right? Let's put this $30 billion in context. There are 4 large industries in India today that have developed an export market of about $30 billion. Pharma, We spent about 4 decades trying to develop generic medicines, get FDA approvals, plant inspections, building a global reputation. About $30 billion of exports today. Gems and jewelry, centuries of art, generations of artisans, a trade that is older than many nations in the world today, and about $30 billion of exports from India. Same story in chemicals, process re-engineering, backward integration, environment clearance, about $29 billion. Textiles, lakhs and lakhs of women employee, crores and crores of meters of yarn, about $25 billion. Each of these industries has taken us multiple decades to come to about $30 billion worth of exports. Now, what if I tell you that there is one product, not an industry, a single product where we export about $30 billion worth of goods. And that product is something that practically lives with us all the time. It's our smartphone. India's exports of smartphones this year is going to touch about $30 billion. And to put that in context, in 2021, we exported $3 billion worth of smartphones. That's a 10 times jump in 4 years. Right? It took us about 20 years in pharma to go from $3 billion to $30 billion. In smartphones, we did it in 4 years. Now, I know what some of you are thinking. It's great, it's a very large number, we did it in a very short period of time, but what are we really doing? The components come from China, Taiwan, Korea, right? We just make the plastic body, put 4 screws and slap a made in India sticker, and we call it $30 billion of exports. This is just an eyewash. I won't deny it, I think it is true. Our value addition in smartphones today is only about 15 to 20%. Which means for every $1,000 of an iPhone that we ship out, our value addition is only about $150 to $200. So the objection is correct, but I think it is wrong in what it means. And why do I say that? When you look at how technology travels across borders, there are typically 3 stages through which it travels, right? The first stage is always low-end assembly work. Then we develop a supply cluster, so we do some sub-assemblies. And then we do value-added works, which is where we bring in technology, right? These are the 3 chapters. This is how every story across the globe has evolved. No country has ever gone to chapter 3 without coming to chapter 1. So clearly India is today in chapter 1. Now, before we get to how India gets to chapter 3, let's look at some of the other global nations and how they moved from chapter 1 to chapter 3. And the first example that I want to give you is China. China started the export story in 1992. They started assembling iPhones in China in they started assembling electronics in China in 1992. And for the next 8-10 years, the same story got written in newspaper that China is just doing assembly works. The electronics are getting manufactured in Taiwan, Korea, and Japan, and they ship to China, China assembles them and ships them. It's just cheap labor, nothing else, right? But China was already thinking of chapter 2. Somewhere in the 2000s, China started developing a domestic supply chain in Shenzhen. In a 50-kilometer radius today, the entire iPhone component manufacturing industry sits. So what took them 15 years, and the figures that you see on the slide are net exports. For the first 15 years that China exported electronics, their imports were higher than exports. But once they localized, the Jacob effect came through and exports boomed. Same story in Vietnam. In 2005, Vietnam exports of electronics was about $5 billion, nothing remarkable, very similar to where we are today. In 2008, Samsung set up a factory in in Vietnam to assemble phones. In 2010, Foxconn followed. And over the next 10 years, the domestic suppliers to Samsung in Vietnam went from 25 to 250, a 10x jump in 10 years. And today, Vietnam exports about $114 billion worth of electronics. From 14 billion when Samsung came through in 2008 to 114, a 9x jump in 2 decades, or less than 2 decades. And Vietnam today is in chapter 3 where they are doing more value-added components. We've set up R&D facilities. They are doing 5G equipment. They are doing airports, Apple Watch, and so on and so forth. So every global economy has gone through three stages. Not just global economies, even our domestic industries. When you look back at home, we've seen a very similar journey, but in a very different industry. And that industry is automobiles, right? And I want to tell you about the story of Maruti to drive home the point, right? In 1983, we did a JV with Suzuki to manufacture domestic cars in India. 85% of the components were imported from Japan. It was called the screwdriver industry, saying हम तो सब कुछ जापान से लाते हैं, यहाँ पे नट बोल्ट लगा के उसको मेड इन इंडिया बोलते हैं. It wasn't false, but again, what happened, right? And Manesar today is witness to the history there that a lot of companies set up small supply shops, plastic molding, some stamping, some wiring harness assemblies. And then over the next 10-15 years, as Maruti localized components, we created a large industry which was the auto ancillary industries, right? And today, some of our auto ancillaries are multi-billion-dollar global enterprises, right? Some of them don't even export. They have plants abroad. They've gone and acquired international companies, right? So what looked like a mere assembly work 20 years down the line is a very, very, very different story. And which is where I make the point that I think as far as electronics is concerned, I think India has already entered chapter 1. We are planning for chapter 2, and maybe over the next 10-15 years, we will find a chapter 3. What will drive us to do this, and can we do this in less than 20-30 years? I think there are 3 reasons that does this. Every economy that we spoke about had a moment where a lot of factors came together that drove this big transition. For India, I think there are 3 factors: the demographic dividend, which all of us know about, the policy initiatives, which I'll talk about a little, and geopolitics, which is again is a very well-known topic, right? Let's look at each of these. Vietnam has 10 crore people, and they export $114 billion worth of products. We have 140 crore people. Just think of that ratio for a moment. What can we really achieve if we put our heads to it, right? And out of that 140, about 65% is a working age population, and it will remain so for the next 20 years. We have a 10, 15, 20 year runway from here to do what the other nations have done. Second policy, I spoke about PLI. We spoke about PLI in one sector because it's easy to visualize the smartphone, but we are working on PLI in 14 sectors. Even in electronics, we are working for a version 2 of PLI where we are talking about higher domestic value addition. And the impact is from import to export ratio of 7x. In about 7-8 years, we are already down to about 3x. And this number is falling very sharply. Geopolitics, I think it is imperative today that supply chains have to move. We've heard enough about that since morning, so I'll not delve into that. But if these supply chains have to move, where do they go? I already spoke about India's population compared to some of the other nations. Now look at the cost. India is 30% cheaper as far as labor is concerned to Vietnam, and about 1/4 the cost of China. So we don't just have a large labor supply, we also have a very cheap labor supply, and this is not an unskilled labor supply, right? Think about the lakhs of engineers that come out of India every year. Now, this is not going to be a linear story. I'm not here to sell you a dream. I'm not naive enough to tell you that because other nations have done it, we will do it. There are a lot of risks. These risks are probably not reasons to be pessimist, but I think these risks are reason to be watchful. I think if we cover these 4 risks, then we have a great growth runway, and the Viksit Bharat dream will not just remain a dream, but we have the potential to convert it into a reality. Like I said, I spoke about electronics because electronics is easy to relate, but electronics is not the only story. Electronics is just the proof of concept. We are doing this today in multiple industries. There are at least 7 or 8 industries that I can name that are in various stages of chapter 1 and chapter 2. Some of them are listed here: chemicals, CDMO, defense, electric vehicles, industrial goods, motors, compressors, and so on and so forth. More interestingly, what the bottom half of the slide talks about, right? Today, if you see, about 50% of global life science companies have a GCC in India. When we talk of a GCC, we typically think of labor cost arbitrage, saying back office operation है, call center बैठाया है, insurance का processing कर देंगे, invoice का processing करेंगे. But in life sciences, there is nothing like that, right? It's all drug discovery. We are no longer a cheap labor supplier. That was the story 20 years back when we set up call centers. Today, we are the brain for a lot of global processes. And if you don't believe my narrative, I'll give you the numbers. Again, just one more number that I want you to think about. $75 million. First spoke about $30 billion. Now think about $75 million. What do we achieve in $75 million? We achieved two great missions in $75 million, right? ISRO landed a rocket on Mars and a rocket on the far side of the moon, which nobody successfully done it, for $75 million. The cost for some of the other countries are listed here, but that's not the interesting point. The interesting point is the footnote below. You know, the budget to make space travel Hollywood movies like Gravity, The Martian, Interstellar was $100 million. They spent $100 million to make a movie about space travel. We sent a rocket for $75 million. Right? So India is not about cheap labor anymore. India is about capability. India is about engineering excellence. Right? And therefore, to conclude, we spent 40 years building pharma. We built electronics in 10. I don't think Viksit Bharat is just a pipe dream. I think we are just getting started on that journey. Thank you so much for your attention, ladies and gentlemen.
Hello. Thank you so much, sir, for such an insightful presentation. And the last word which you said, कि 75 million तो बहुत छोटा amount रह गया है. So it was really mesmerizing, and many will think, yeah, that's where we have to go, and that's what we have to achieve to make 100 year of India. So thank you
Absolutely.
so much.
I'm really excited for the next 20 years.
Thank you so much. Ritesh sir, we would like to take it forward and tell our presenter what we are going to do.
Good afternoon, everyone. First of all, thank you for inviting me here. It's a pleasure being here, and I'm pleasantly surprised seeing the number of people that have really come to attend this. So thank you to IMA and the people of Indore for this. After a very, very interesting, for the lack of a better word, presentation by my colleague, by my fellow panelist, I'm going to talk about banking, which is a rather boring subject and should be boring. Whenever banking gets exciting is when problems occur. So what I'm going to talk about is what has changed in banking in the past few years, past few decades. Typically when we talk about banking or innovation in banking, we only talk about the digital aspect of it, but there's more to it. And usually what happens is that we're so used to the changes that occur in banking that it goes unnoticed. It becomes a way of life. So what I'm going to mention here, there's no rocket science. All of you, most of you know about all of it. I'm just summarizing here to say what's transpired and what I think, or what we think is the way forward as far as changes in the industry is concerned. Now I'll just give you a brief context. I mean, while all of us know, banking is one of the oldest professions, oldest industry in the world. And if I hazard a guess, it's probably before Christ. There were crop loans probably in the Indus Valley civilization, in Mesopotamia, Venice. It was formalized through central banking structure in the 1700s. The first bank in India was set up in 1770. I don't think many of us knew of that, neither did I. And then we know about nationalization and how several new banks came in under the British Raj. We heard about the equity market, or about the industry, about the economy and how we're headed. It's just a little bit of a context. Banking is nothing but a reflection of the economy. The level of activity in the economy determines the level of activity in the banking. So today, when we are a $4 trillion economy, banking as capital invested in banking sector today is 30 lakh crores. Now that's an eye-opener because we keep hearing of bank sizes, etc., but that's the capital outlay. The loan book, and this is a credit by the banks to the industry, has grown 3x in the last 10 years. And the deposit base, of course, is 240 lakh crores. Now, what's changed in banking? Like when I started off, I said we typically talk about the digital innovation, but there's innovation all across. Digital just one aspect of it. RBI, through its regulatory framework, judiciary, and the product innovation by the industry, both banks and non-banks in the financial industry, have done fantastic work. I'll try and touch upon each one of them to kind of bring out what and how things have become efficient, more productive, and how your life with the bankers is so much easier today. Digital has touched one and all in every aspect of life. Social media, internet, and the aspect. But within the banking aspect, your eKYC today is done in a matter of minutes. I mean, I'm sure some of you remember, you had to go to branches. Many years ago, you couldn't open a bank account without an introduction by somebody who held an account in that bank. From there to where we are today, the unified lending, I mean, UPI we touched upon, paperless trade. Today, some of you would be experiencing this. You can have bank guarantees, letters of credits, SBLCs done digitally. You don't have to visit a branch. You don't have to send somebody to the branch. Consent-led data, this is where it affects you and me in every aspect. We know the concept of account aggregators. That makes our life so much easier. It makes life of the other stakeholders in banking so much easier. What's in store? A lot. I mean, CBDC we know about, UPI wallets, but CBDC is a central bank currency. Generative AI, it's helping banks internally. I mean, I'm sure it will help you when you are dealing with banks. The regulatory framework. Now, again, this is an eye-opener, putting it together on one slide. RBI has done a fantastic job in the past 3-4 years. There were 5,000 odd circulars. I'm not sure how many of you knew that RBI had 5,000 plus circulars that were prevalent for how a bank had to kind of conduct itself, how it was supposed to function. It's all consolidated now in 244 master circulars. There are credit bureaus today. There is choice of multiple rating agencies. Financial markets, I mean, some of you who approach the bond market, earlier it was a bilat or you went through the private market. Today, all bond issuances above 50 crores are required to be done through an online portal. Payment liberalization, my colleague touched upon, Ashutosh touched upon UPI. That's just one aspect of so to say, digital payment framework. There's eNACH, RTGS, multiple. Risk-based oversight, this is an important aspect, which I'm not sure it touches any one of you, but within banks, there was a fixed manner in which banks allocated capital. If you're a AAA, AA, triple B or lower, you allocated capital on the basis of your rating. But what RBI is trying to devise, and in line with the international standards, is that it's determined not on the basis of rating, but forward-looking approach as determined by banks' internal processes. Again, given the development, digital and otherwise, banks and other financial partners in the financial ecosystem, they're coming up with multiple products. You know today, securitization, there are so many tools by which banks can recycle capital. Not just banks, actually there are NBFCs, MFIs, HFCs who can recycle capital. There are, again, embedded credit ecosystems where today, I mean, I'll give you an example. IDFC has a process that a two-wheeler can be approved and disbursed in 2 hours. Now, I just gave that as an example, and 2 hours is a real, so to say, an outlier, does not work for every product, but I'm just giving that as an example of how technology, regulations, and habits of the consumers is changing the landscape on and how banking can evolve. This is a big change. I'm not sure how many of you know. I have been in banking now for close to 27 years, and some not so good segments of the borrowers would coin a term payable when able, which means, yes, bank, it's their job to get the money from the bank. How does it go back to the bank or to the depositors? Payable when able. IBC, I think, has changed that game. Today, the whole system is far more disciplined, and while you, on the surface, it may seem that it's good for the banks only, but not really. It's good for you. It's good for you as a supplier. It's good for you as a depositor. It's good for everyone. This one aspect has begun to really force people to take their contract seriously. Otherwise, on the legal judicial ratings, I don't think India is rated very high as far as global standards are concerned. So I won't go into details of this aspect, but if you see that the judicial reforms, whether it's IBC, whether it's alternate forms of dispute resolution, the formation of NCLT, these are various aspects that is only helping banks actually smoothen process, dealings, and make life easier for borrowers and depositors. Now, this is a few things we've put together. Ashutosh touched upon blockchain. That's one of the aspects. But there are so many more things that will come up. I mean, like he asked me about UPI. UPI was one aspect. However, I think with the changes in technology, even we don't know what would it look like 5 years from now. The way we do banking is very different. It was 5 years ago. It will be very different 5 years from now. A few things. Today, bank borrowing constitutes roughly 80% of credit to the economy. In developed markets, that number is roughly 25–30%. Capital markets actually cater to a large part of the corporate borrowing. That is gaining traction in India. RBI, SEBI, the government hasn't been at it for the past few years, hasn't seen a lot of success, but the market is growing. CDS offering, again, a tool for banks or the lenders to hedge, even not the best of credits, by hedging itself through CDS, another form of insurance. Corporate UPI, yes, hopefully we'll see that. Imagine if that were to happen. How easy would life become for non-individual dealings? IoT-driven banking, again, can devices initiate payments? Maybe. You take a Xerox on lease, you take a car on lease. Can they initiate payments on the first of every month? Maybe, but it's in the future. But these are thoughts. These are something that work has begun, let's hope. Blockchain-enabled trade finance, I talked about. I think this is one piece of technology that hasn't seen a lot of adoption other than crypto, as we all know about, but I think a very, very strong tool. That's all from me. If anyone has any questions, happy to answer. Otherwise, thank you.
That was amazing, Ritesh sir. We always used to think that banking is being changed by UPI, at least I thought so. But what you told and the evolution which you talked about, that how the digital rupee, CBDC, RBI governance from 50K paperwork to just 244 paperwork. These have been amazing achievement which India is doing. And I'm very sure with both of you guys telling so much knowledgeful in the capital market and the banking market, India will achieve its milestone in 2047. And soon we will say कि अपना time आएगा, because 75 million is not now a small amount. Thank you so much.
Thank you so much. Thank you, sure.